Morning, everyone. Welcome to the On Time on Target play. It's not the play of the day. Welcome to the On Time on Target morning brief, where we invest in fighter pilot precision on a daily basis. If you haven't joined us before, you're catching us on replay for the first time. Basically, it's about a 20 to 25 minute fighter pilot morning brief where we vary in a structured manner, go through much like a fighter flight briefing in the morning, go through the same topics every day, hitting certain highlights, covering certain topics. But I know I talk too fast, so you have to pay attention. That sort of thing. That's all part of it. So here we go. Today we're going to talk about DIDI and the death of DIDI stock. If you haven't been following this, we've been talking about Luckin mostly. You know that yesterday's topic was Luckin. I ended up dropping all of Luckin yesterday, completely blew out of the entire position, have nothing left. I was holding a few shares from Wednesday, but Thursday the pain was too much. It's like I'm going to get out while the getting is good. So we're out of Luckin altogether. In the book, if you still have it, well, take the ride, right? You're gonna take a ride. But I like DIDI. I think there's a re-entry point, and that's what I really want to talk about today. So today is Death of DIDI. If you didn't follow the DIDI saga, IPO'd a few weeks ago. Chinese crackdown, cybersecurity issues. They're talking about levying the biggest fine, even bigger than Alibaba's. I forget how big that fine was, but it was kind of ridiculously big, right? And then you've got other things out there, no new users, so they can't sign up new users. Their app has been blocked from most of the Chinese places where they could have apps, and largest fine in history. And they're talking about delisting. So our topic of the day is DIDI, and then the question of the day is, what is delisting? And we'll talk about that process as well. But what to do with DIDI? It IPO'd here. We're going to pull the chart here in a few minutes. The stock is in complete free fall. This morning alone, let's see, yesterday it was down 11%. Today is down 14% pre-market already. Again, I'm flat on DIDI as well. You can't touch it. And that's one good thing about professional management, money management, is you sit in front of a computer all day and you watch for these things. So you can get out before the masses get out. Let me tell you, the folks are getting out of DIDI in a big, big way. Now, there's going to be a re-entry point, so you have to watch until we pull the chart to talk about what's the plan for getting back in, because it is still a ride-sharing app in the largest middle class in the world. So it's something you want to participate in. It's just you got to get out now, let the dust settle, probably the fine get levied, and then go from there. We had the same story in Luckin. Went from $50 to $1. Now back to 15, touch 15. We got out. Now it's back at 13 and change this morning. So that's what we're going to talk about. I do have some exciting longs out there. You see several of them. We're setting up for the fourth day in a row for the green, and Fridays tend to be positive anyway. So we got Skechers doing great on earnings, American Express, Twitter crushing earnings, and Snapchat's up like 15% this morning. So we'll talk about how to trade that once we get to the trading portion. On the short side, Kimberly-Clark sold off a little bit. It's right in our zone of 5% of missing earnings, and then Boston Beer's way out of the zone. But if you wanted to hop on something crazy, Boston Beer missed earnings so bad they're down 20% this morning. Again, that's ticker SAM, and you can short DIDI, you can short Luckin. I think these things are going straight south. All right, if you're catching us on replay, make sure you subscribe, click the notifications bell. If you want to join us live, it's $25 a month to come in the room. There's a chat window and a Q&A window that you don't see. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for the day. Make sure you have your Q&A window and chat window set up correctly. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. And full disclaimer information is available right here at OTOTnow.com. All right, let's get started with today, Friday, 23 July. We're going to grow our money, protect our money, and live off our money. Well, we're switching today's topic. Normally, I'm a Chinese tech guy. I get made fun of a little bit with my clients. They're like, man, you push Chinese tech a lot. Well, I do, because that's where a lot of the huge upside is. I think there's more upside in Chinese technology than anywhere else. And it's actually, the situation's getting better. And you're like, what are you, an idiot? The stocks are getting crushed. I'm like, yeah, I know, that's right. They are. So, it's like, as soon as you leave a name, what do you want to have happen? Yeah, get crushed. DIDI show up at $4. I would love that. Luckin went from 50 to 1. Holy crap, right? What do you want your entry point to be? Do you want to buy it at 40? and then slap high fives when it goes to 50, or do you want to buy it $1 and then slap a high five when you need to sell out of it at 15, like we did yesterday, or high 14s for most folks? So yeah, you want things to get crushed. So now that I'm out of Luckin, I'm out of DD, I'm still in KWeb. Yep, I hear you. I hear you. I know. We're taking the ride in KWeb because it's not as focused as the individual names. But the point is, bring it down. Come on, Chinese government, crack down in your own companies, shoot yourself in the foot. That's what the US did last year, was shutting everything down. What did we do? We made a ton of money off of that because the stocks cratered. We bought them low, we rode some through, and we made a ton of money last year. So really, we're talking about protecting our money right now by selling out, but we're already out. Now it's how to grow our money, because now we want the things in free fall. All right, there's our Death of DIDI. What is the delisting? We'll get to flow, long, short, open, short, long. We'll do market review, headline review, kind of cage our brains where we are in the world. Long-term investments, we'll take a look at DD, Luckin, the Luckin story, if you will. And then KWeb. Is KWeb safe here? Hey, if you don't like the risk, get out. If you don't mind the risk, then stay in, because you're going to get rewarded. We'll get into our short-term market execution contingencies and academic resources, our standard. Excuse me. All right, let's go ahead and look at CNBC.com. I said the futures are in the green. Let's refresh these real quick and take a look at where we are. Sweet, GMs are calling cars that start on fire. So, all right, not good for them. I checked their stock. They weren't the stock wasn't in free fall this morning, because I was thinking, ooh, that might be a good short story. But so far, it's not selling off. All right. So where are we? 0.5%, a little bit less across the board. Let's go around the world real quick, or as quick as this internet will support. Okay, Europe in the green across the board. Good looking Friday there. Asia mixed. Hong Kong off over 1%, no big deal. Bonds 10 years up at 1.3. Again, almost touched that 1.1 level, kind of climbing back up. So not much of a storyline there. Oil hanging out just above 70. Gold and silver aren't really moving that much. And then crypto, I didn't look yesterday. So crypto 32.4 for Bitcoin. So, it dropped below 30. I actually personally have some micro strategy, MSTR. That's high risk. I'm not even going to put a client in that, but I picked a little bit up on the trade earlier in this week, and I'm still holding it. And I don't know, I'll probably exit today, to be honest, but it was a fun little ride. But I might keep it. I don't know. I have to really think about this Bitcoin thing. All right. Especially after the big B word conference on Wednesday. All right, let's look at the headlines. Analyst calls today: Apple, Nike, Qualcomm, Facebook, Alphabet. Those are all positive upgrades and things. There is some concern with Apple going into the iPhone 13 release. There's new iOS 14.7 that's out. You should be updated already. 15 is coming. It's supposedly supposed to be pretty significant. But then, the iPhone 13, we'll see. The stock does tend to sell off into these new iPhone releases, and sometimes it waits till after the release, and then everybody's like, "Oh, this phone sucks," and then we wait till January and we find out, well, it actually doesn't. That was just a few people complaining about things, because that's what they do. They complain about things, and then the stock, they sell more iPhone 13s than anybody's ever sold of anything, and then the stock screams higher. That's the story of Apple, if you will. Monster Energy. Underperformance is opportunity to get growth cheap. Shout out. Anyhow, I probably shouldn't drink these things, but I do. Helps me wake up in the morning. Don't judge. All right. What other headlines do we have here before we take a look at DD? There's some IPOs coming up. I wouldn't really touch any IPOs right now, especially I get asked about the Robinhood IPO. I'll probably do a video on that probably Tuesday. I wouldn't touch it. They just got fined. All right. Skechers Boston Beer. Yep. They crashed. Yeah, the story behind Twitter. I've never been a real Twitter investor, and yep, I've been wrong. It's up huge. So is Snapchat. I like Facebook better. All right, let's switch over to DD and talk about the DD story. So here's where we are. So we IPO around 14. So if you remember, what is that? 15 trading days ago, about 3 weeks, whatever. So I was excited about this IPO. I think it was supposed to either price in the 8 to 10 range or 10 to 12 range, and I had all my targets set up, and I reached out to all my clients and said, "Hey, who wants in?" And for my most aggressive folks, I didn't even ask them; I just put them in. And then boom, it opens actually at 14. It's like, you gotta be kidding me. So greedy. Opens at 14 and then starts screaming higher, right? So you simply, if you missed it at the beginning, you go back in, you buy more. So I had entry points into DD up in the 16s. You talk about terrible entry points, but up in here, and then the stock basically has crashed ever since, right? the initial wave down, you go, okay, well, it's back to where like it should have opened. You're like, okay, whatever, that's fine. And then it hangs out in here, and then here comes, in this week, basically the Chinese news. It's like they're talking about delisting this son of a gun. Like Luckin got delisted. It has to move to over the counter. You can still make money in over the counter like we did with our 15x gain in Luckin, but there's a lot of risk there, and we're going to talk about that. So here we go. Here's the free fall from yesterday. What was that? 11%. 14 is already down at 8 this morning. We'll take a look at that when we get over the day trading chart. When you look at the story of Luckin, so let me pull up. Since it's delisted, got to pull it up in pull it up in Yahoo. All right, so we're out. So why do we care? Well, we don't care, but is it still on the watch list? Heck yes, it is. So here is the run up in Luckin back in, what is that, a couple years ago, January 13th. So actually just prior to COVID, year and a half ago. And then boom, there's the fraud allegations, the delisting, everything happening here. It's down near $1. And this is where you make your money right here. So when I think of DIDI, I'm thinking about how do I make money on it? I'm already out, so I don't really care. I want it to fall. So I keep going. Set records on how far you can fall so fast. Give me shares of DIDI at 85 cents. It's like I'm going to go all in. I mean, with responsibly, disciplined, all in. But so go back to DIDI. It's like, okay, here's where we are. So when do I get back into this? Well, I think the fine has to be levied, but the day they levy that fine might be the buying point. Because if they fine it like they did Luckin's fine was almost nothing. And Luckin screamed higher after they got their fine, right? Because now it's like, okay, it's like, when you're doing something bad, it's like, okay, I'm all worried. What's the penalty? It's like, give me my penalty. And then you get your penalty and you're like, what? Really? That's the penalty? It's like, heck yeah. And off it goes. Unlike Alibaba got a huge penalty. And I think this is going to be a huge penalty too. If it's a huge penalty, the stock will continue to fall off. If it's kind of a slap on the wrist, like, hey, stop doing that, but seriously, get back out there and sell some coffee, then the stock will scream higher. In this case, it's like, get back out there and move our people around, right? So we can be a productive, economy. I think their GDP grew at like 6% or whatever. So it's like, yeah. So I mean, it's a great story. So when I think of DIDI, it's the thesis that I want is now for it to get down to at least below $5. It's like, come on, man, give me 5. Get that fine, then when you got to time the entry point. So you're going to hear another show on DIDI here in the future. All right, a couple minutes to the open. Is KWeb safe right now? If you don't like it, get out. Period. I don't mind it. Yeah, it's down here. I'm actually a buyer here. Is it going to get worse? I don't think so. KWeb, the fund manager at KWeb, has said repeatedly these are isolated stories. It's not everybody in China, and China technology has the highest margin out there. So why would you leave the name? So I think it's time to load up, do your own due diligence. It's safe, but if you don't like the risk, then just get out. That's fine. You won't hurt my feelings. If I manage your money and you say, hey, let's get out of KWeb, I'll be like, okay, that's the end of the conversation. All right, let's look at the TD Ameritrade ThinkPipes platform. There we go. There's your DD in free fall. It's actually bouncing a little bit, and here's Luckin in free fall as well. Give me a second to get set up for the market open. Good morning, everyone. Welcome back to the On Time On Target play of the day. Here's the opening bell. All right, we have 3 charts in front of you on the TD Ameritrade ThinkPipes platform, if you will. You got a 1-minute chart here on the SPY. You can see the S&P's up 0.5% and trending higher. So should be setting up for a good Friday. All right, we have Twitter has fallen from where it was. I kind of like this entry point. So Twitter's our long story. So we're going to take a look at Twitter long and then focus in on DD short. It's already been down here to 8.6. I think people sell out of that. So we're going to hop in, get in on this short. Okay, it's going to be a 10-cent stop on DD short. It's a little bit out of our range, remember that 8 to 10 or 5 to 10% range. So we're going to just track the high of the day here, 903. So our entry point is 893. So again, you can watch what I'm doing with the math. Again, if you don't like what you see, then don't take it. But I'm going to use 10 cents off of where I'm covering the high, and we're going to go from there. I think when this thing flips to the down, this is all profit taking. So why would it be going up here? Ooh, look at Twitter taking off. Why would we going up here? Well, it's just simply profit taking. So 893 is our entry, covering a 903. point, and 903 still good as far as covering the high of the day. 893, get ready for it on the downside. Again, the reason you don't take it right here is you just don't know if that high of the day is going to hold. So if it keeps powering higher, that's actually a good thing. It makes our numbers better. So 893 is what we're waiting for. It's going to be a 10-cent stop, covering at 903 high of the day. We're about a minute and a half into the trading a day. That's interesting retracement in Twitter. If you took that Twitter long there, you would have been out in a heartbeat. So that's why you want to be patient. Patient. So we're waiting for DD to come down to 893. If it doesn't, we won't take it, but I think it's going to hit it right here. I think all of this, a lot of volume though right now in that 893, or excuse me, at 899 to 9 area. So a lot of trades going down. Just going to let that go. Okay, off into minute 3. Make sure 903 is still good. Yep, 903 is covering. 893 is our entry. Yeah, Twitter falling like a rock. Being patient on the trade. I'm going to get rid of Twitter here and keep that 893 in mind there. As soon as I look away, it's going to go. I want to see what Snap is doing long. All right, get ready for 893. 893, there it is. There's our entry point in DD short. So again, arrow down here so you know which way we're taking this. And 903 is the high that, or is above the high of the day. So we've got that covered. So the trade we're in assumes that it's not going to ever go back and beat the high of the day that it's already had. We'll talk about our R units here in a second. All right, so 893 is the entry point. So 883 would be your first R. So whatever you risked, you'd double your money if it hits this. And so you'd make the amount that you risk. So if you risk 300, you'd make 300 here. And 873 is the next one. Then you'd make another whatever amount you risk there. And then our exit point is this 863. And why I like this exit point is it's already been there once today, right? So it hit it earlier. So really, I think this trade's gonna hit probably in the next couple minutes. I think it's just gonna strike down. This is what I assess. So anyhow, we're in the trade at 893. We're covered at 903. There's 1, 2, 3 R, leaving at 863. All right, let's look at what's going on in Snap while we let our trade just cook over there. 22%. Okay, I can't really take it there. So let's look at some other names. Let's look at that Boston Beer South. Oh my god, or short, excuse me, Sam. I held the stock probably over a decade ago. So they missed earnings like bad. So I think they were projected to make like $6 a share, and it was like $4 a share. So, oh, there it is, $4 a share. So yeah, conference call didn't help things. It's like, yep, we suck. So they're costing their shareholders a lot of money this morning. All right. What else can we take a look at? Sam D. Let's look at the DD story. Or no, excuse me, the Luckin story. We're in DD. Not as bad as I thought. And I think this is probably going to get worse. Is my take on it. I think Luckin could easily end up back in below $10 based off of the Chinese news. All right, so we're at the 2R point on our trade off on the right, so just keep an eye on there. Have your exit in for the 863 point. All right, let's look at Skechers was another name. They crushed earnings, so I'm not really into shoe company, which is why I wouldn't really recommend this as a trade, because after all, it is shoes, and it's not Nike, right? Same with Foot Locker, it's like, well, it's interesting, and we're selling stuff, but it's still like not all that compelling. All right, so can't really get into Skechers there. Let's check American Express. They beat earnings as well. I could get behind American Express as more of a long-term investment. Again, I really don't like the trade part, but if it's a financial, I think it's not a bad place to have money. I prefer JP Morgan, nice juicy dividend. So, all right, let's see. Get ready to exit your trade. We're waiting for 863, and we're out. We wanted to look. Did we look at Snap? Yep, Snap's at 22. Twitter. See what Twitter was kind of all over the map there at the open. Remember, it went higher and then lower. See what we got here with Twitter. Touched 73, went all the way down, hit 70. It's barely in the green anymore. So, all right, well, the market's not buying all the pre-market hype there in Twitter. So we'll see. All right, getting close to exiting our trade. I was hoping it would hit while I'm on the same screen, so I don't have to come back to it, but it looks like I might have to come back to it. I did want to check GM stock. See if it's hit at all by the recall this morning news. If you trade headlines, again, just because you saw the headline doesn't mean everybody else did, right? So even if it splashes across CNBC, GM's kind of what I would say one of those retirement stocks. So people that are in it probably aren't going to get moved out of it on a headline. But so all right, looks like the trade is sitting here at the 2+ R point. So I'm going to leave that. If you're in the trade, pull it up on another screen because I need to leave here and move on with the long-term investing portion of the show. So we'll come back to the trade here in a second. All right, what's long? Trade desk, power and higher, 6.8%. Gotta like that. Facebook's up 2%. That's probably related to the Twitter, Snapchat moving up, social media stocks moving up from there. There we go. Get a little bit of the picture of the 5-day. BX has been crushing it. It's got to be over 105 a share now. Visa up, Boeing, MasterCard, Google, Clickstream, BlackRock up, Delta Airlines, JP Morgan's up. So yeah, big Friday fry-yay. Let's look at the downside. Okay, yeah. Steve said stick with K-Web. Thanks for the 8.4% loss this morning, Steve. Okay, I hear you. Stick with it. Grow up. Stick with it. Is my take. If you don't like the pain, get out. But obviously, it's going to be ugly today. VIP Shop is a name you don't want to be in. Let's see. But I've still got a piece in there because it's showing up. So I got to see who's in that. I need to get out of that. Luckin, Alibaba selling off. I have no problem with Alibaba long term. Just take the ride. NIO's Chinese EV name, just fine. Look for other Chinese names in here. Nope, that's pretty much it. And they're all getting slammed. All right, so China leading the negative leaderboard there. All right, so I got on there. Let's check on our trade, see if it's hit it yet. Nope, not yet. All right, let's talk about the delisting process, and then we'll come back. Just gonna wait for it to hit it while I'm talking about it. Come on. Oh, there it hit it, 863. So boom, we're out of the trade. So let's recap the trade, and we'll close out of that. All right, so we watched it at the market open. We know that the big selling to the downside news story there about potentially getting delisted, largest fine. We watched it open. It kind of bopped around here. We put in 1 penny above the high of the day, kind of marked that. And basically once it started down, you don't take it in here because it's too soon and too risky. But once it retraces all the way back down to about 1%, which is what I'm using here, is this 10 cents is 1%. That's your entry point to the downside. From there, it struck down 1, 2 pretty quick. Congestion here between 2 and 3R, and now down at the 3R point. I wouldn't hold much of this. I would be happy. I mean, look at the move it's made on the day, 16%. I mean, it could go down 20%, maybe 25, but I would be out of the trade here. So overall, nice trade. All right, let's leave the trading scene and go to talking about the delisting process for our question of the day, which is here. Okay, delisting definition and how it works. So here we are in Investopedia. It's a removal of a listed security from a stock exchange. Okay, so that doesn't mean you can't trade it, right? It means it's not on the New York Stock Exchange. It means it's not on the other exchanges that are out there, since I'm blanking. But basically, it moves to over the counter, which you can still trade it, but it's just a little bit different. It's certainly not a first class stock, if you will. So it is a privilege to be listed. It means you have to meet certain criteria and you have to maintain those criteria. Otherwise, you are going to get delisted. So here's the listing standards. We're not going to go into those. But basically, if you're under $1 a share, eventually you're going to get delisted. You're going to go to over counter. You're going to go to pink sheets. Some of the custodians still charge, a fee for that. When they say trading's free, then you like trade a share of luck, and you're like, why did I get a $6.95 fee? It's like, well, because it's not actually free for over the counter. Well, I don't know if that's the case or not. I really don't deal with these a whole lot, but yep, involuntary delisting. So the company doesn't have that. This is a trick. You're right. If you ever see split, so we tend to think of stocks like NVIDIA just had a split, right? So the stock price gets pretty high and it splits to make it a little more affordable. Now you can laugh and say the math's the same, but there's a psychological component to that, right? Apple split, Tesla split. I mean, big companies, when their stock goes crazy and higher, they split. Some people do a reverse split, right, to juice their stock back up. Or it's a trading vehicle like the VXX does a reverse split. So the You're not up 900% in a day. That's just a reverse split. So when there is a split, just realize your apps and your websites, those are kind of dumb. So in other words, they don't necessarily know there's a split, right? So you can get this like, why am I up all this money, or why am I down 75% of my portfolio today? Well, that's probably somebody split or did a reverse split. So anyhow, you can try to jink out of this, not going below $1 by doing a reverse split, but you're really just kind of kidding yourself. Things are not going well if your stock blows. If you have to do a reverse split, things are not going well. Okay. All right, Aeropostal or Postal, I think that's how it said. Okay, so delisted securities may be traded over the counter except when they become private. A lot of times you'll see that either they go away, they get delisted because of liquidation, i.e. bankruptcy, they go away, or somebody just says, heck with this, I'm gonna go in and buy all the shares up and take it private, right? Dell Computer did that. Okay, let's look at DIDI one more time, just because I'm more curious than anything. Okay, down at the $8 level, and then looking before I leave you to see how far that has gone. 13.5, so not too bad. Touched 13 down there, but anyhow, down on the day for both of those. So called it. We're out of it yesterday. All right, and nice trade today. With that, I'm gonna let you guys go. There is no morning brief Monday because I'm gonna be at the airport, and I'm not gonna try to do it from the airport again because that was a no-go the first time I did it. But I will see you guys back Tuesday. So Tuesday will be the next morning brief. All right, you guys have a good one. Bye.